Hi, this is Nick from Income Digs. Welcome to this video tutorial where we show you the exact tools and resources we use within our own real estate investing business. So today we're going to be going into QuickBooks and we're going to be covering a few miscellaneous topics, but some really important ones that are really common in the industry. So first, we're going to be talking about how to deal with draws within your accounting books. So many times when we purchase property, we're getting a loan not only for the purchase, but also potentially for the rehab as well. And dealing with that can be a little bit confusing because you have the loan, you're paying payments to that loan, but you don't necessarily have the cash yet. It's released in draws. So we're going to be talking through that and how you can manage that within QuickBooks. I'm also going to be touching on the budgeting feature of QuickBooks, which is really cool and really promising, but has a few limitations. So I'm going to bring those up and you can decide if you want to use it or not for your own business. All right, so let's get into it. And what we're going to do is we're going to get into the sample set of books here and actually purchase a new property. And we're going to log that we have a loan for it. All right, so I don't have this property yet. And I'm just going to go, for now, I'm going to go to my balance sheet for this year. I don't own the property yet, but I'm going to log it, okay? And the other thing I want to talk about briefly is how do we differentiate between our different projects, okay? There's a few different schools of thought. There's a few different ways to do it. The first way, which I've shown in quite a few videos, is by class. That's one way to do it. You can use the class reporting to do that. You could also do by customer, okay? And there's pros and cons to each. And we're going to get into those. I'm going to do it by customer for today, just for fun, to switch it up a little bit, because really you can do it either way. All right, so to go to your customers, you can go to sales and go to customers. I'm just going to add a new customer, and I'm going to call this customer, let's see, 240 South Street. Okay, so that's my building. Now, one thing you have to consider when you are deciding whether you're using customers or classes is like, are your tenants customers as well? And if so, you might have to have different subcategories for those, right? But for now, I'm just going to call 240 South Street is the customer, and I'm going to log a journal entry that I'm going to purchase this property. Okay, it's going to be a really simple one. Let's say that it's on the 12th of April, and I'm going to be adding the accounts as I go here. So what I'm going to do is I'm going to do real property basis. And actually, the other thing that I've been doing is keeping generic chart of accounts and using the class or the customer to differentiate. So instead of setting up a new chart of accounts for this 240 South Street, I'm just going to say that I purchased the building for a certain amount, okay? So let's say that the building to me is worth $140,000. And so here I would have to put that 240. Okay, now here, and then on class, I would maybe have to put rehab. So that would be the reason for using customer, is that you can then use classes to differentiate between rehabs, rental properties, wholesaling, etc. Class would then be used more as your different profit centers. Okay, so let's say that the basis is that 140, and then my land is another 60. So, okay, and then rehab. Okay, so I bought it. Now, how did I pay for it? Let's say that I put down $20,000 in cash. Okay, so that'd be my checking account. And then let's make it $40,000. Okay, and then how did I pay for, oops, that's why it's not coming up. How did I pay for the other part? I probably got a loan from somebody, right? So this is an area where I'm going to add a new liability. Now, let's kind of pretend that I'm doing private lending, just because, honestly, those transactions are just a little bit simpler, but it really doesn't change how you would deal with this, okay? So I'm going to say that I have 240 South Street purchase loan, okay? I'm also going to pretend, for simplicity, that we don't really have any closing costs, which obviously is wrong, but that'll kind of complicate. So long-term liabilities, notes payable, purchase loan. I could make that a sub-account I don't know if I have other mortgages though. Yeah, sometimes I'll make like a mortgage super account and then sub accounts for these, but for now, let's just leave that. So the purchase loan of 160. So that is exactly like a really clean transaction, right? I purchased the property. It's $200,000 total. I split the land 140 to 60, or the building 140 to 60. I paid for it $40,000 of my own money and $160,000 on the purchase loan. And again, this is super simple. Obviously, we'd have closing costs in here that would change how much is coming out of my checking account. But that's kind of it for now, and I can just save and close this, and I'm done with the transaction. And if I go to my balance sheet for this year, and then maybe I customize this to say, just filter on a customer and make that customer 240 South Street. You'll see that I spent the $40,000. I have $140,000 in basis, for $60,000 in land, and $160,000 in that purchase loan. I'm just going to save this report balance sheet for 240 South Street. Okay, so that is there. Now, what if, in addition to purchasing the property, we got a loan for the improvements? Okay, so how does that work? Now, it could potentially be within the same purchase loan. Okay, let's say that I got a loan for $200,000, but they're withholding 40. Actually, so that we don't confuse it, let's say that 220. So they're withholding 60 for my renovation. Okay. So what I could do is I could edit this transaction. I can just click into it, find it, and say that now this loan is for 220,000. Okay. Obviously, right now the numbers don't match. So where does that $60,000 go? The bank's holding on to it until I complete various parts of the project. Maybe it's split into 3 draws: $20,000 after rough-ins, another $20,000 after drywall and cabinets, and a final $20,000 upon final walkthrough and certificate of occupancy. Maybe something like that, right? So they're going to hold on to it. So we need to make an account for that. We are paying interest on that loan. It's a liability against us. The loan has started, but we don't have the cash yet. So where is it? It's probably in some kind of escrow account. It's ours, but we can't have it quite yet. So what you would do is you would make a new asset. Something like that, for this property, construction escrow, and you would, maybe it's other current assets, and I think what they can, it's kind of like retainage, it's kind of like prepaid expenses. You can kind of label it how you would want to. I'm just going to make other current assets for now and save and close it, and that $60,000 is sitting there. Now, a quick note on this, and I mentioned that we made our chart of accounts more generic when it comes to the assets as far as the improvements and everything. And if you have a lot of properties, that's the way to do it. Same thing with this construction escrow. If you have many properties for which you're doing this, you don't necessarily need a separate escrow account for each. The fact that you've designated at 240 South Street will have it show up on your balance sheet in the right place. So if I were to save and close this now, go back to my balance sheet, you can see that I have $60,000 in construction escrow ready to be spent on construction. And then what happens is you spend on construction from your checking account or from your credit cards or whatever, and when that money is reimbursed to you, you create a really simple journal entry. So let's pretend like I'm 1/3 of the way through and it's like a month later. And so what you would do is you're going to get paid from the bank. You're going to get paid for the rehab that you've done. And so you're going to debit your checking account, and then that escrow account, you're going to credit it. So that money's going to leave the current asset, and it's going to move into your checking account. And you can see that just kind of happen there. And that's as simple as it is. It's just really, the money is yours as an asset, but you're not able to have it as cash, so it's just going to sit to that other asset account. Now, if you're doing improvements for other customers, meaning that you're like a GC, you really wouldn't do anything with that escrow account. It's really for them to deal with, the customer. You're not getting the loan or anything. When those draws come in, you'll treat those as payments for your services. Okay, so that was the first thing I want to talk about, is draws. The next thing I want to talk about is budgets. Okay, so budgets within QuickBooks. It's a really neat feature, and it kind of works for rehabs, but there's a few problems with it. Now, the first thing that I need to point out is we talked about products and services being the way that you categorize your rehab expenses, and that's a good way to do it. I've gotten a lot of questions lately asking, can't we just separate out cost of goods sold into a very specific chart of accounts so that we can manage our rehab categories that way? And the answer is yes, you can. Okay, so instead of using products or services, you could create separate cost of goods sold, okay, for the various different categories you use. And my advice on this is understand your business. If you have, say, I would say no more than what I have here, which is 25. If you have a lot more than that, I would say products and services is the way to go, because everything that you enter here is going to show up on your P&L. Yeah, you're going to be able to collapse it up, but everything here is going to show up on your P&L. So I think that if you're using really detailed categories, products and services is probably a better way to go. But if you're 25 or less, it might be okay for you to add these as chart of accounts, and you would simply log every expense to that, and it'll show up on your P&L. It's really up to you. You can do it either way. The benefit of doing it the chart of accounts way is you could potentially use what I'm about to show you now, which is budgeting. So let's show you that. So budgeting, if I go to my gear icon here and I go to budgeting, you can add a budget for a project, all right? So if I do 240 South Street budget, I'm gonna leave fiscal year for now. Let's do it as yearly. And we're gonna subdivide by customer, and I'm gonna do it by 240 South Street, okay? And then you're going to fill in what you think your revenue and your cost of goods sold is going to be. So here you would probably, if you're rehabbing this and it's for your rehabber, you would probably leave the revenue items blank, but then you would go down here and you see your construction costs are filling in down here. If you use products and services, you would not be able to do this. But here's where you could take your budget item, and now it's not letting me do it. But you would enter your items here. And for some reason, it's just not allowing me to do it. So I'm just going to save it for whatever reason. Save and close. Yeah, it's not letting me do it. So anyways, this is buggy right now. But I want to talk about the restrictions of it. So you can see what will happen when the user interface isn't down. You would enter your information for what you're going to spend, and then it'll track what you're doing. All right, it's a really cool feature. The problem with it, the main problem with this whole thing, is that it's restricted to a time period. Okay, and we all know that our rehabs, if I create a new one, you'll see, our rehabs aren't necessarily to one's fiscal year. If you start one in January, then great, it'll probably work out for you. But if you start one in November, this won't work, which is really annoying to me. So keep that in mind. I wanted to bring it up because somebody specifically asked about it. Hopefully I'll get it working. I can show you a demo of it. But the only way you can use the budgeting feature is if you use your chart of accounts for your rehab categories. Now, if you're doing it for rentals, you're in luck, and the fiscal year thing doesn't really matter because usually we are tracking our rentals on a yearly basis. So you can create your budget for your various different rental items. And in fact, what I'll do is I'll do a follow-up with this to show you how it works with rentals, to show you the actual power of it. All right, so I just wanted to touch on that. Obviously, I wasn't able to show you how it actually works, but that's the restriction, is the time period, as well as you must use the chart of accounts for your rehab categories. All right, now, all the topics that we talked about today came directly from a question. So I really appreciate that. When you have a question, just post it in the comments to a video, and usually I'll respond with a video showing you my thoughts on that. All right, so I encourage you to do that more and more so that we can answer your questions, all right? But for now, check out the free resources available at incomedigs.com. Next time, we're going to talk through budgeting a little bit more. Also, we're going to bounce back to Podio for some cool things with checklists and templates and date-driven checklists, all that kind of stuff. It's going to be really, really fun. Let me know your questions, and we'll see you guys next time. Thanks.